Welcome to today's Explainer, everyone. We've got a seriously massive topic lined up for you today. We're going to take a deep dive into the fast-moving, incredibly dynamic world of foreign exchange.
So let me ask you a quick question to kick things off. Have you ever traveled internationally and had to swap your home currency for some local cash? Maybe you exchanged some dollars for euros at the airport or yen for pounds? Well, if you said yes, congratulations. You've actually already participated in this staggering trillion-dollar ecosystem.
Here's our roadmap for today. We're going to cover 1. What is foreign exchange? 2. The massive market scale. 3. Who moves the money? 4. Drivers of daily turnover. 5. Tracking global market activity. And finally, 6. Stepping into forex trading.
All right, let's jump right into Section 1. What is foreign exchange? The foundation of global currency.
Okay, so before we get into the really crazy numbers driving the global economy, we have to understand the core concept that starts the whole shebang. At its foundation, a foreign exchange transaction is simply the process of converting one currency into another in the global forex market. This is done for international trade, travel, or online trading. It's an incredibly elegant, simple mechanism, but it continuously connects buyers and sellers worldwide 24 hours a day.
Moving right along to Section 2, the massive market scale. Trillions in motion. Trillions of dollars. Literally trillions. I want you to just pause for a second and let that staggering number sink in. Trillions. And we're not talking about a yearly total here. That is the daily trading volume. This makes Forex the absolute largest and most liquid financial market in the entire world. It completely dwarfs traditional stock markets. Because of this massive volume, currencies can be bought and sold incredibly fast with virtually no delays.
Which brings us to Section 3, who moves the money, from whales to retail.
So who exactly is moving these trillions across global hubs like London, New York, and Tokyo? Well, commercial banks are the absolute whales of this ecosystem. They make up 40% of the market just providing core liquidity. Right behind them are financial institutions like hedge funds sitting at 30%. Then you've got multinational corporations exchanging cash for global trade at 15%, and central banks stepping in to manage monetary policy at about 10%.
And then there's the final piece of the puzzle: everyday individuals. Retail traders make up this 5% slice. They participate through specialized brokers to enter this continuous global relay race. And look, I know 5% might sound like a tiny sliver next to those banking whales, but remember, we are talking about 5% of a multi-trillion-dollar daily pie. That's a massive amount of capital.
That leads us to Section 4, drivers of daily turnover, fueling the market. So what actually fuels all this? There are several core forces acting as the engine for this market, causing these trillions to change hands every single day. First up, global trade and payments. Multinational companies are constantly paying cross-border suppliers. Then, currency speculation, where traders and funds aim to profit directly from price movements. We've also got central bank interventions aimed at stabilizing national currencies, and global investment flows, as money moves across international borders into stocks and bonds. Add in the fact that this happens during continuous 24-hour global trading, and you can see exactly what keeps this ocean flowing.
On to Section 5, tracking global market activity, following the flow.
Now you might be wondering, why does all this daily volume actually matter to me? Especially if you're looking at that 5% retail slice. Well, high trading volumes signal strong liquidity and tighter spreads. In plain English, when the market is highly active, trades execute faster and cheaper. Compare that to low trading volume, which indicates a less active market session where trades might be a lot more sluggish or expensive. Put simply, higher volume means better conditions for everyone, institutional and retail traders alike.
To keep tabs on this, analysts basically track the flow in 3 key ways. They check real-time data on trading platforms, they read daily broker reports for localized insights, and they review macro-level central bank surveys to spot active sessions and truly understand where currency demand is shifting.
And finally, Section 6, stepping into forex trading, accessing the market.
So how do everyday people actually bridge the gap to this trillion-dollar arena? It's all through brokers. Let's look at some top brokers from our source data. You've got Exness with a high 4.7 rating, known for low spreads and strict oversight by top-tier regulatory bodies like the FCA and SISEC. Then there's FX Pro at 4.6, providing advanced, industry-standard software platforms like MT4 and MT5. And AvaTrade at 4.5, which is heavily praised for being beginner-friendly with fantastic educational resources. Basically, these brokers offer the tools, platforms, and the regulation necessary for beginners to jump in safely.
Honestly, it's wild how accessible this space has become. If you look at a modern broker profile, many of which gained a massive global presence around 2016, they often feature zero commissions, a minimum deposit of as little as $20, proprietary mobile apps integrated with TradingView, completely segregated client funds for your security, and over 100 technical indicators. You can literally enter this trillion-dollar market from your smartphone with just a $20 bill. No way could you do that a couple of decades ago.
But, and I really cannot stress this enough, knowledge is absolutely your strongest currency. Yes, access is easier and cheaper than ever before, for sure. But understanding market mechanics, analyzing volume, and rigorously managing your risks, that is what actually builds a strong foundation for any beginner.
The global forex engine literally never sleeps. It's massive, it's continuous, and it connects the entire globe round the clock. But with the market continuously moving, where do you see yourself fitting into that 5%? Are you ready to study the charts, or are you just going to watch the waves roll by? Keep that in mind as you continue your learning journey. Thanks for joining me on this explainer today, and stay curious.